Dr. Bilal Bagis, an economist from Turkey. Good evening to you.
Hello, thank you. Thanks for having me.
You're welcome. So the main concern is inflation, said the Fed's chairman, but recession is the next concern. How can everybody else balance those?
Well, Fed is definitely determined to control soaring inflation and restore price stability. So out of the two main goals, the dual mandate, it is focusing predominantly on price stability nowadays, just as they did in the late 1970s and 1980s, early 1980s. But they're also following up the labor market and output data closely. So they will probably aim for the neutral borrowing rate, which is about 2 to 3% in the U.S. And in general, I would say the search for an adjustment to the post-pandemic new normal, it will continue. So the rates, they will probably rise. The rise will continue until they are able to tame the 4-decade high inflation, which itself is due to surging energy, food prices, supply chain disruptions, COVID-related lockdowns, and the pandemic-related supply and demand imbalances, and the war in Ukraine, of course.
Right. So what's the impact of all of this on economies in the Middle East?
The Middle Eastern or Gulf region economies, they are mostly doing good, actually, both in their fight against the pandemic and in their benefit from the current high energy prices. So energy prices are high, which is to their benefit, to the benefit of most of them. Inflation rates in Gulf region, it's also around 2 to 3%. I believe in Israel it's a little bit higher. However, the tightening cycle of the major central banks and the following divergence between the East and the West, even between the advanced economies, it will surely affect the developing economies, emerging markets in many ways. The dollar index is at its 20-year high. So broadly speaking, I would say we should expect inflationary effects of weak national currencies, higher import bills, higher cost of production in general, and capital outflow from developing economies, huge financial capital flows. It will also lead to monetary policy transmission, just as we talked about the rate increases in Gulf region economies as well. And the negative impact on those with huge debt denominated in US dollar is another issue. The real debt burden will probably rise, and external finances, it will be very difficult and costly.
Now the big question, how long will this crisis last?
Well, frankly, a recession or a hard landing, it's very likely, especially in the U.S. and other tightening economies. So we'll see how the stock markets, labor markets, even commodity and crypto markets, they will be impacted. Honestly, I would say another round of easing cycle, it may even be needed by 2024, as is argued by some market economists nowadays. And international organizations, as we know, they are lowering their growth forecasts, and they are expecting higher energy and food prices at least during the next 1 or 2 years. So these hawkish monetary policy stance across the major central banks, it is in general mitigating economic growth and even leading to economic declines.
So I guess what should people do, with savings, with investments? It's tough times.
Definitely it is. Yeah, I will totally agree.
Yeah. Well, we'll have to wait and see. Dr. Bilal Bagis, I thank you very much.
Thanks for having me. Thank you so much.
Thank you.